We back at 1246, adequate stated interest. There's an adequate stated interest for a debt instrument if the stated principal amount for the instrument is less than or equal to its imputed principal amount. In parentheses 12462, this means that the discount rate used to determine whether an instrument is adequate stated interest has adequate stated interest is the same as the rate used to determine its issue price. For sales or exchanges before July 1st, 85, there is adequate stated interest on the instrument if its stated principal amount is less than or equal to a testing amount. The testing amount is determined in the same way as the imputed principal amount, except that these discount rates are used to determine the present values of all payments due under the debt instrument. Excuse me. Thank God. 1. For sales or exchanges of new section 38 property, i.e. new investment credit property, the discount rate is 110%, 110% of the applicable federal rate. In parentheses, that's 12,464, compounded semi-annually. 2. For sales or exchanges of property other than new section 38 property, where the borrowed amount, i.e. the stated principal amount, was $2 million or less, a discount rate of 9% is used if the borrowed amount exceeds $2 million. The discount rate used is the sum of A, 9% plus B, the percentage determined by multiplying the excess of 110% of the applicable federal rate over 9% by a fraction, the numerated of which is the excess of the borrowed amount over $2 million, and the denominator of which is the borrowed amount. 12,462, imputed principal amount, except for potentially abusive situations. In parentheses 12,463, the imputed principal amount is the sum of the present values of all payments of principal and interest due under the debt instrument. These present values are computed as of the date of the sale or exchange by using the discount rates shown above, which are based on the applicable federal rate, the AFR, that's applicable federal rate, AFR. And then as you can see, it has a translation and discount rate. And it has one. Sale or exchange of property other than new section 38 property and property part of which is leased back to the seller, where stated principal amount of that instrument does not exceed a statutory dollar limitation. The limitation, which is adjusted for inflation, equals $3,234,900 for sales and exchanges in 1992, $3,079,600 for sales, etc. in 91, $2,933,200 for sales, etc. in 90, and $2,800,000 for sale, etc. before 90. 2. Sale or exchange and the discount rate for number 1 would be not more than 9% compounded semi-annually. And now we had 2. Sale or exchange of property other than new Section 38 property and property part of which is leased back to the seller, where stated principal amount of that instrument is over the statutory dollar limitation in 1 above. And discount rate for that one would be 100% of AFR compounded semi-annually. 3. Sale or exchange of new Section 38 property other than property part of which is leased back to the seller. And then it'll be 100% of AFR compounded semi-annually. 4. Sales or exchange of property where part of the property is leased back to seller or is a person related to the seller. 110% of AFR compounded semi-annually. Number 5, sales or exchange before July 1st, 85 of property other than new Section 38 property where borrowed amount, i.e. the stated principal amount, does not exceed $2 million. 10% compound semi-annual discount rate. 6. Sale or exchange before July 1st, 85 of property other than new Section 38 property where borrowed amount is over $2 million. Discount rate 10% plus the percentage determined by multiplying the excess of 120% of the AFR over 10% by the fraction, the numerator of which is the excess of the borrowed amount over $2 million. $2 million. And the denominator of which is the borrowed amount. The discount rate as so determined is compound semi-annually. 120% of AFR compounded semi-annually. Low rate established by taxpayer. 7. Sale or exchange before July 1st, 85 of new Section 38 property. The discount rate is 120% of AFR compounded semi-annually. 8. Sale or exchange where taxpayer establishes the IRS's satisfaction under regulations or regs mean short for regulation, to be issued that a rate lower than the AFR should be used with respect to a debt instrument, and the lower rate is based on the same principle as the AFR. And the discount rate is lower rate established by a taxpayer. We had 12,463 imputed principal amount in potentially abusive situation. The rules at 12,462 don't apply to determine the imputed principal amount of a debt instrument received in exchange for property where the exchange involves a potentially abusive situation. The imputed principal amount of the debt instrument received in this case equal the fair market value of that property, adjusted to take into account other consideration involved in the transaction. The term potentially abusive situation means one, a tax shelter as defined in Code Section 6662 D2C2 for purposes of the penalty for substantially overpayment of tax, in parentheses 71629, i.e., not the tax shelter definition used in the tax shelter regulation rule, in parentheses 71809, close parentheses, or two, any other situation which by reason of recent sales transactions, non-recourse financing with a term of excess of the economic life of the property and other circumstances is of a type specified in regulations as having a potential for tax avoidance. This also applies to Code Section 8483, transactions, deferred payment, sales where interest is computed. See 12550 as a sequence. Under 12464, determination of applicable federal rate, IRS determines the applicable short-term, mid-term, and long-term federal rate used in determining the issue price of a non-publicly traded debt instrument sold or exchanged for non-publicly traded property. For applicable federal rate charts, see 740. The short-term AFR is used if the term of the instrument is 3 years or less. If the term is over 3 years but not over 9 years, the mid-term rate is used. If the term is over 9 years, the long-term rate is used. Options to renew or extend the debt instrument are taken into account as prescribed by regulations in determining the instrument's terms for this purposes. So anything 3 years or less is short term. Anything over 3 years but not over 9 years is mid-term, and anything over 9 years is long-term. The AFR to be used on a sale or exchange is the lowest 3-month rate. This means the lowest of the AFRs in effect for any month in the third calendar month period ending with the first calendar month in which there is a binding written contract for the sale or exchange. Illustration: on March 15th, 93, John entered into a binding contract to sell new investment credit property to a corporation in exchange for a non-publicly traded debt instrument payable in 3 years. The applicable short-term federal rate for the month of March 93 is 3.96%. For the month of February 93 is 4.23%. And for the month of January 93 is 4.37%. The discount rate used in determining the debt instrument's imputed principal amount is 100% of 3.96. The March 93 rate, since this is the lowest of the AFRs in effect for any month during the 3 calendar month period ending with March 93. 12466 sales or exchanges of non-publicly traded property for non-publicly traded debt instruments where issue price equals stated redemption price at maturity for some transactions. See below, where non-publicly traded debt instruments are sold or exchanged for non-publicly traded property. The regular rules for determining issue price in parentheses 12460 at the secret close parentheses do not apply. Instead, the instrument's issue price in parentheses for OID purposes close parentheses equals its stated redemption price at maturity in parentheses 12455 close parentheses. Observation: this means there is no OID on debt instruments issued in these transactions. However, there may be unstated interest on these sales or exchanges under the rules discussed at 12550 at the sequence in parentheses related to deferred payment sales close parentheses. These transactions include sales or exchanges of property where the total payment due under the debt instrument and all other consideration, including other debt instruments received as consideration for the transaction, do not exceed $25,000. 2. Sales or exchange by an individual of his principal residence in parentheses within the meaning of Code Section 1034 C 10650 at the sequence close parentheses 3. Sales or exchanges of certain forms by any individual, an estate, a testamentary trust, a small business corporation as defined in Code Section 1244 open parentheses 10806 close parentheses, or a partnership parentheses if it meets requirements similar to those of Code Section 1244C3 for small business corporations close parentheses, but only if at the time of the sale or exchange it can be determined that the sale price cannot exceed $1 million. 4. Amounts that are contingent on the production, use, or disposition of property with respect to the transfer of a patent as prescribed in Code Section 1235A, parentheses 11053, close parentheses 5. Certain transfers of land between an individual and a member of that individual's family that are subject to the unstated interest rules of Code Section 483E in parentheses 12556, close parentheses 6. Sales or exchange after June 30th, 85, where a cash method debt instrument is issued by the buyer in exchange for property. A cash method debt instrument is a debt instrument issued in exchange for property other than use Section 38 property if a the stated principal amount does not exceed a specified dollar limit. This dollar limit, which is adjusted for inflation, parentheses for sale, etc., after 89, close parentheses, equals $2 million $380,300 for sales and exchange in 93. $2,310,600 for sales, etc. in 92. $2,199,700 for sales, etc. in 91. $2,095,100 for sales, etc. in 90. And $2 million for sale, etc. before 90. B. The lender does not use an accrual method of accounting. C. The lender is not a dealer with respect to the property sold or exchanged. D. The regular code section 1274 issue price rules would otherwise have applied to the debt instrument. And E. An election to have the debt instrument treated as a cash method debt instrument is made jointly by the borrower and lender. 7. Sales or exchange before July 1st, 85 and after December 31, 84 of property other than use section 38 property used in the business of farming if the borrowed amount does not exceed $2 million. We had 12, 4, 6, 7 debt instruments issued in corporate reorganizations, a regular issue price rules in parentheses 12, 4, 56 at the sequence, close parentheses, are used to determine the issue price of a new debt instrument that in a reorganization as defined in code section 368A1, in parentheses 5050 at the sequence, close parentheses, is issued by a corporation in exchange either for its own stock or for its own already issued old debt instruments. This means that the issue price of a new debt instrument is determined under the rules that apply where a debt instrument is issued in exchange for property. Parentheses 12.459. Observation. This is because stock and debt instruments are considered property for this purpose. Thus, even if a debt for debt exchange qualifies as a tax-free organization, OID, as well as cancellation of indebtedness, COD income, C1290 at the sequence, close parentheses, still can be created where the exchange is a realization event under code section 1001 and the debt instrument stated redemption price at maturity exceeds its issue price. However, this OID determination doesn't affect the amount of gain or loss reorganized on the exchange under the reorganization provisions of code sections 354, 355, or 356 in parentheses 50 at the sequence, close parentheses. For these purposes, the issue price of the new debt instrument is determined by reference to FMV if either the new or old debt instrument is publicly traded. If neither instrument is publicly traded, then the new issue price is determined as follows. The issue price of a new debt instrument that is adequate stated interest in parentheses 12461 close parentheses is its stated principal amount. If it lacks adequate stated interest, The issue price is determined by using the AFR that is used in discounting the payments due under the instrument, close parentheses, 12462. The above rules apply not only to the issuer of the instrument, but also to its holder, creditor, in parentheses, 12472, close parentheses, for the debt instrument issued before October 10th, 90, and those issued A in a Title 11 or similar case filed before October 10th, 90, B, under a written binding contract in effect at all times after October 8th, 90, C, under a transaction described in documents filed with the SEC before October 10th, 90, or B, under a transaction the material term of which were described in a public announcement before October 10th, 90, and which was the subject of an earlier SEC filing, and which is the subject of a later SEC filing before January 1st, 91. OID on a debt-for-debt exchange in a corporate reorganization is determined as follows. If a new debt instrument that was issued under Code Section 368A1 plan of reorganization had an issue price as otherwise determined for OID purposes that was less than the adjusted issue price of the old debt instrument, when the new issue price is treated as equal to that old adjusted issue price. Whenever we come back, we're going to go here to 12468, debt instrument issued as part of an investment unit.